We gave the advice a little while ago about adding to our highest conviction stocks. I know Brian mentioned his portfolio concentration, things like that. I got to think that the most concentrated ones are his higher conviction stocks. So the specific question from JP says, your 3 or 4 highest conviction stocks after this pullback. So for that purpose, I'm going to limit this to tech stocks. I'd say my highest conviction stock overall that we've talked about today is probably Disney, but that's not really a tech stock that's pulled back a lot. I'd say out of the tech stock pullback, and then I'll shut up and let Brian answer it. Out of the tech stocks that have pulled back are probably Square and Apple out of the ones we've talked about. I still think Square has just kind of tapped into the ecosystem concept of its financial services business. It doesn't offer interest-bearing deposit accounts right now. It doesn't offer checking accounts. It doesn't offer personal loans. It doesn't offer auto loans. It doesn't offer, mortgages or insurance products or all these other things it can bring into its ecosystem. And I think as it incrementally adds these products, there's going to be an amazing network effect that just kind of is going to work like kind of Apple's ecosystem of products, which is, I mentioned earlier why I love Apple so much. If you want to talk about one outside of the stocks we mentioned today, one of my highest conviction names is a company called Digital Realty Trust, which has pulled back a lot lately. It's essentially a real estate stock that trades as a tech stock. It's a stock that a company that owns a bunch of data centers, which is what all of these tech stocks are kind of, where all their software as a service products and all their cloud-based applications and things like that. This is the physical homes for these. That's pulled back quite a bit. If you're looking for a tech play without a ton of downside risks, it's backed by real estate. That's a company. The ticker symbol for that one is DLR. That's one of my favorite stocks after this pullback. Brian, what are you watching? Or are you just kind of not looking at your brokerage at all?
No, there's a bunch of things that look like good deals right now. Of the ones we talked about, I would say Twilio is my favorite. I said it's got plenty of growth levers, and they're extremely innovative and have added to their addressable market over the last several years. And that's a kind of company that you want to get in on, who has the optionality and has the ability to grow into markets, adjacent markets. I would be remiss if I did not talk about Mercado Libre at 25% off sale today. That one's just a fantastic long-term play on a market that is still in the single digits in e-commerce in Latin America. And not only e-commerce, Mercado Libre has a fantastic payments platform, and they're going to become a fintech innovator to allow consumers, the unbanked and underbanked consumers in the region, to have access to financial products that they need. And lastly, just because the coronavirus is ending, just because we're getting a vaccine and we're going to see people in person again, doesn't mean that you're going to need a pen and a paper to sign documents anymore. People who have adopted DocuSign's e-signature platform are not going away. They're going to continue to expand their use cases. They're going to continue to grow customers. They're close to finishing their data center to allow them to get FedRAMP level high approval, which will allow them to get into DoD and Veterans Administration. DocuSign just is just a solid buy to me. We can't tell you that, we can't give you personal advice on the show, but I love the price it's at. It's going to come out with earnings here on March 11th, and I think it's going to beat. And I'm just excited about DocuSign, Mercado Libre, and Twilio over the next 5 to 10 years.